Quick update on what you might have missed yesterday from GME land. Josh, 7 things to go over. First thing of note, XRT has climbed back up to a 1,322% short interest. I don't know if that means that the shorts are going to XRT for creation, or at least creation of GME, but it does suggest that there is something going on there. Again, you'll hear me say this a lot, but smoke, fire. There's another regular poster on Superstonk who's done an excellent job of tracking of Fidelity's shares to borrow. And it was noted on Wednesday after hours, Fidelity's shares to borrow went from, I believe it was from the mid 200,000s down to zero. Again, I can't necessarily say that this is a smoking gun, but it's just one more thing to add to where there's smoke, there's fire.
Yeah, next we're going to go into some of these deep, complex metrics of the market. So reverse repo is a big topic. It's continuing to climb and hitting new all-time highs. To me, that suggests that there's fragility in the system because when you go and do a reverse repo, you are getting collateral. And we know that the monetary system is based around collateral, and especially the need for collateral and how it artificially props up your balance sheet. So it suggests that there's a more risks in the system. We'll go into that further in just a second. Another thing that is happening, if you watch the Jeff Snyder interview with Mike Green, which is an absolute must watch, if you go to the end of the video, they talk about the option prices on the Eurodollar Fed funds market. Whoa. Before you click off, basically what that means is you can bet on where Fed funds will be. And right now, people are betting in the option market on the Eurodollar Fed funds. So you're putting a leveraged bet on where Fed funds will be, is that they will actually be negative. And the options on those are skyrocketing. Not now. We are obviously going through a hiking period right now. But these market professionals are betting that in a year to 2 years, the Fed funds will actually be negative. What does this suggest? That there's actually more risks in the system that we see. So we'll probably see a scenario, or the market is betting that there will be a scenario where we probably break something. This is the market betting that the Fed will break something. So we'll probably hike, something breaks in the market, then they're going to have to cut rates to zero, and the market's betting that it will actually go negative. So this is very interesting. Why this connects to GME is because we talk about how big guys can continue to expand their balance sheet until there's a collateral shortage and something prevents them from expanding their balance sheet anymore.
Just a quick heads up. So when we say expanding the balance sheet, the expanding balance sheet is the way you would describe with an accountant speak, the way that they can continue to keep issuing and issuing and issuing IOU shares. So that's how this ties in to that. Really important to note that.
Yeah. So there's all this fragility building in the market, which means there could be a scenario where everybody else you clunk on, and you do know that we're no longer in an environment where you can continue to expand your balance sheets. Therefore, the shorts would have no one that would do business with them. Therefore, we could see that MOAS style event.
Yeah, or if nothing else, if the shorts can no longer, or those who are short can no longer continue to expand their balance sheet. Let's just say best case scenario, or the worst case scenario from GME long positions, if they could just maintain their balance sheet at the existing size, well, they couldn't continue to suppress the price or do shenanigans to do it. Now, they might have baked in their pre-existing shenanigans, but again, that can only last for so long. If you're looking for the pickup line at the bar, this is what it boils down to. Reverse repo and
options on Eurodollar Fed funds.
Yeah, these things, that is reverse repo going up, or the market betting, that is the bond market essentially betting that interest rates are going to go down. This is not something that companies generally would want to do. In other words, companies wouldn't want to turn to the RRP window.
Yeah, you're basically buying the furthest tail hedge humanly possible. I mean, if right now we're in a hiking cycle, so people are betting as far out as they can go, hedging their balance sheets, and hedging is not expanding. Yeah. And what the shorts need to do is continuously expand their balance sheet to continue to do these financial engineering. So the more fragility there is, the less capability that they will have to do that.
Yeah, and likewise, the more fragility in the system, I can't prove this, but my gut feeling is that the harder it is to maintain the highly refined, sophisticated short warehousing mechanisms to otherwise manage the short interest. Point is, companies do this not because they want to do it, they do it because they have to do it.
In times of extreme fragility and massive risk-off environments, the companies that survived are not the ones who are the most complicated and so deep and complex. They are the ones with simple and have defined rules. So,
Flexibility and slack too.
yes.
No, too, again, thanks to Superstock, was that Pulte Homes got slammed with a massive ITM put wall. And again, I don't know if that's in any relation to the
Buy-in of GME that he had.
buy-in to me, even though Pulte I don't think is related to the company, although it still bears his name. I don't think he's technically related to the company anymore. But again, I find that particularly interesting.
Yeah, and
Yeah.
we are seeing these big guys start to get into it now. So Pulte, I genuinely do not trust people who call themselves philanthropists, as I do not think that is altruistic, and I think there's much more going on. But to say the least, it is definitely bullish, and I have seen him tweeting that he is studying this avidly. So if he does get a really good understanding of what is happening, then I think billionaires have buddies. And it would just take a few of these billionaires to step in and really get the party started.
The bigger the lie, the harder it is for people to believe. And I think GME, when the case is presented, is that it's just the truth might be so outlandish or so outside, was it the Overton window, that people just can't process it. But nonetheless, when you have gravitas is the word, when you have people with a high degree of gravitas looking into this seriously, that can create FOMO, if not necessarily from the millennials and from the Zoomers, at least maybe from a different class. Excuse me, at least maybe from a different generation or generations. So interesting to know on that front. Lastly, I'll notice this, Boston Consulting Group, BCG. The more and more I read about this, so I have never worked for Boston Consulting, McKinsey, Bain, or any of them, but in the accounting world, there is some overlap, and you've got professional colleagues that exist that I know who do exist in that world. I have got to say, like I have no insight, no personal insight I can offer, but I do find it notable that I'm not surprised to hear about all this dirty laundry that's coming out. And again, this isn't to say BCG is guilty of anything. I mean, I haven't seen any evidence to suggest that is the case. But again, Josh has said before, there's a hell of a lot of smoke. And I will also note that if BCG was in on this trough, I'd be really curious to see if the other guys, again, the McKinseys, the Bains, or whatever, run on it too.
Yeah,
So,
I would say, lastly, before you make any rash decisions on anything that we are saying, we are complete Rubletons. And all week, I've been in Houston just and saying,
yeah.
Josh, should I put on some cash secured, some cash covered puts this weekend?
No,
I mean,
covered
Friday.
calls.
Yeah,
Covered calls.
So should I put on some cash covered calls Friday? And all week I was like, I don't know. Like, he has a lot of capital to do so, but we were kind of debating it. And today, nonetheless, we find out the markets are closed on Friday. So before you think of any rash decisions that you are dealing with some experts, I would note that we had no clue the market was closed on Friday.
Yeah, they just did that the last second. No possible way to do any research on that front. Yeah, so the takeaway from this
is it even a holiday or something?
It's Good Friday, isn't it? It's Easter. Yeah, it's Easter. Well, anyways, my point is that if you're planning to roll your contracts on Friday, you might want to plan again. I'm looking at you, Justin, from last week. You idiot.
Yeah.
So.
I'm also very impressed with the price movement that we've had. So just for actually final note, we'll go into what we've done with our portfolio. So I bought a bunch of condors, basically betting that that GME will be in a range bound, I think by April 29th. I also today, where it was BBBY's earnings, they tanked. I bought quite a few calls, especially with the FTD cycle that is happening. We are not as knowledgeable on that, but they do have that FTD cycle OPEX coming up. So
I thought I closed on my BBY contracts. Shit.
So yes. So we do have quite a bit going on. BBBY seems very interesting right now. I don't know how big their FTD pileup is, but with OPEX, I bought quite a few calls going out towards August, just so the time delay doesn't kill me, as well as playing around with some some condors while GME flatlines. That's pretty much what I'm doing. Justin is getting some cash covered calls.
Yeah, and actually I might be getting a sign, but let's not worry about that. That's a problem for tomorrow.
Yeah.
Problem for future, Justin.
Yep. So this is what we're doing. Please do not take our advice as we are idiots. So thank you, and we'll see you on the next one.